when the price is at its peak, and a divergence is not required on the lower time frame such as this if one already exists on the higher time frame. In this case, the daily chart had a distinctive divergence where the price was at the same level or higher. It formed a V-shaped type pattern, and the level of the MACD at the second price peak was lower. So it only requires the lower time frame. In this case, this is the hourly chart, which is directly underneath the daily chart, the next time frame down. It only requires that the MACD, this green line, the faster moving of the two lines, to turn in the direction of the divergence, and thereby undermining the price. The price, you could see as it was peaking out, was sitting at 196.5 at its high on the S&P 500, and as the indicator drifted down, it brought it down to 195.5. And this happened within the course of, this was June 19th until June the 23rd. I guess that was over the course of a weekend there, it looks like, the 20th and then the 23rd. So even from the 19th to the 20th, it had already brought the price down to 195.70, which was 80 cents. That it brought the S&P 500 index down just from here to right there in basically 1 day's time, being confirmed by the hourly chart turning in the direction of the daily divergence. Just this small move in the index price of 80 cents probably had the out of the money put options increase in the multiple hundreds of percent for the options that expired that day on the 20th, because the 23rd obviously was Monday, and that would have been into the next trading week. So to take advantage of just a short-term trade here would have been just that next day from the 19th to the 20th. And even better, though, right after that was that the price had stalled and come back up and retested the same levels again on the hourly chart, but the hourly chart itself was severely undermining the last technical peak. So the ability to abruptly drive the price down at this point was far in excess of the original pattern, because we're looking for the price to be at the same levels or approximately level, but look at the amount of distinct divergence between this peak and that one. It's extreme, to say the least. So the more extreme, the greater the opportunity. So if this one moved down $1, then that means this one has the ability to move down $2 or $3. And just